Hey traders, what's going on? Welcome back to another Bullish Bears tutorial video. I'm your host Kevin, and in today's video I'm going to show you guys how to use the ORB strategy. That's the opening range breakout. This is a really good strategy to use, especially in trending markets, and it also helps to see where we should place our stop loss or even have our targets. So let's get into it and I'll show you how it works. Now, the ORB strategy, opening range breakout, is a fairly simple strategy, making it very simple to learn. So I do suggest a lot of the beginners sort of take note and sort of get into this and maybe even add it to your playbook. So the first thing we're going to do is we're going to look at whichever opening range time frame we always look at. So if you're consistently looking at a 30-minute opening range breakout, stay on the 30-minute. If you're looking for a 15-minute, stay on the 15. I would not recommend going lower than the 15. Some people do use the 5-minute, but a lot of times with the 5-minute opening range break, we will see a double breakout, which again will stop out anybody trying to take out the first breakout. Now let's look at the 15-minute time frame. We have our 9:30 a.m. Eastern candle, and we're going to mark out the high and the low. And again, this is on the 15-minute time frame, so the candle starts at 9:30 and ends at 9:45. Now how you can use this is you can look to see how we react within this, and when we close below one of the levels, we would look to take it to that direction with our stop loss on the other side. So we see price stayed very range bound until we got a very strong break right over here. And once we got that close, we can look to see, okay, we got the close below. Now at this point, it depends on where your other strategies co-align, right? Are you using fair value gaps? Are you using other time frames, different analysis entries, whatever the case may be, to find your entry and stop loss? You could keep your stop loss near the other side of the opening range break, or you could leave it at the next pivot high. Then you would maybe come to another time frame or a different level to find where you're targeting. Do you want to target maybe a previous pivot low? Do you want to target that previous day's low, which if it is futures, it will be, if it's down here, sometime overnight. So that can also possibly work as another entry and target to look for. So we can let the price play out, and we see we blast right to that target. It was a huge move. That is 200 points on the NASDAQ. Again, though, the stop loss is very, very wide, about 50 to 60 points. So anybody who does trade NQ might have to size down to an MNQ because such of a wide stop loss. But it gives us a general idea of direction in the market, and then we're able to work on it from there when it comes to placing our stop loss and really letting our winners run. Now, I'm going to show you, again, this is the NASDAQ on the 15-minute time frame. For this video, the example I'm going to be using in the opening range break will be the 15-minute time frame. We're going to let this first candle play out, and as we see on the 15, we have some consolidation. So we're going to mark out, as always, the high of the first 15-minute candle, which is at 9:30 a.m. Eastern, and then the low of that 15-minute candle. So now we have our opening range. Now we're looking for our break. So the next candle we happen to get is a fake out candle. Now if we were looking at the 5-minute time frame, that might look like it's trying to break out, but that's why it's so important to follow through with the time frame analysis we're looking at. If you're looking at a 15-minute opening range break, then you're going to want that 15-minute to close in that direction, because now at this point we would have been able to secure a very tight stop loss on a long position because we acknowledged and noticed we were creating a higher low from pre-market, and we failed the breakout of this opening range. So we would then be able to target, if not the top of the range, some other area of liquidity from pre-market or even the previous day, which at that point gives us a much better risk to reward than just a one-to-one. So again, another way we could use the ORB strategy. Now I want to show you an example of a double break and how we might be able to use a double break to our advantage to understand when we possibly shouldn't be taking a trade or when we should be targeting a certain high or certain low. So the first thing we see is the market is opening here. We have our 9:30 candle, 9:30 to 9:45. So that gives us our opening range break. We're going to make this yellow so we know that it is different from the other pivots we're going to be adding. So there's our opening range low, our opening range high. Now we can mark out some pivots that we're looking for. So the first pivot to the upside I would see is I see our previous day high right here. Now something I do want to note is we were very range bound on that previous day. So I would almost anticipate us taking out that previous day high and possibly rejecting. A lot of times when we get range bound price action like this, we'll get a breakout and then a fake out right to the downside. So I would watch this as a possible key level. Now to the downside, we can't use the previous day low because the previous day low isn't till over here. We would use a pre-market low. So now we have our pre-market low, and we have an idea of where we might anticipate price to go. If we break out to the upside, we could look for a quick move to 20,529. If we break out to the downside, we might see 20,343. However, the first candle we created on this opening range is a very strong candle to the upside. So I would really anticipate price to continue because we don't want to be trying to catch a falling knife, so to speak. So we would let this play out and see how we react. So we got the close above, and then we went boom right to our target of that previous day high. What happened after we broke previous day high though? We got a strong rejection back lower, closing us back within that previous day's range. So again, if you're using different types of strategies, you might be able to then say, okay, well now we rejected the previous day's high. I'm going to take that short with my stop loss at the highs, and I'm going to look to possibly target the lower end of that opening range break. And the reason you would be doing that is because you saw the momentum back to the downside, and double breaks do happen, especially in range bound markets. And we have to remember the market ranges 70 to 80% of the time. So it's really important to incorporate both levels when it comes to using the opening range break. So another way we could use our ORB strategy is by combining it with other strategies, right? Let's be aware of previous day high and previous day low. And because we are charting on a 15-minute, 30-minute, or higher, we can look at the hourly time frame to look for some potential swings or strong pivots. So we have our 15-minute opening range right here with the high and the low. We could also look at the previous day's high, which is this high right here, and the previous day's low, which is the low right here. And this might help us get direction, right? Now I could see on the opening range break, if we break to the downside and manage to get below that previous day low, well, that's a lot stronger of a confirmation because now we're breaking some major pivots. We're breaking the opening range break to the downside. We're breaking previous day low. Statistically, a lot of these things are more bearish and can help us determine our bias earlier in the day so we could catch the full trend. Now that I have my previous day high and previous day low, like I mentioned, I want to look at maybe an hourly time frame and look for some major pivots. So I see our pivot over here. This is the previous day low. I see another previous day low right before that, another previous day low right before that, which will mark this one out. And then I do see another crucial pivot sitting all alone down here at this 20,200 area. Now I have an idea that says, okay, well, we have some low-hanging fruit is what I like to call when we have some lows that are very close to each other that look like they should be swept. And I see that we don't really have much above us. So I could potentially see the market selling off to the downside. We could let the chart play out. We could see the first move of the day was to the downside. This is actually on the hourly still, so I do apologize. We'll go back to the select bar, come back here, and go back to our 15. Let this play out one more time. We see right away we do get our breakout to the downside. We get a rejection to that previous day low and an re-entry back into our range, our opening range breakout range. So because we have our re-entry, we could look to see how we react to the highs. If we fail to get back above and we fail the double break, we're able to then take our short position and really look to see if the market wants to give us a good trend. We could target the next pivot low because we already took out that previous day low, or we could even target that next major low around 20,200 because again, if we get below some of these lows I already have marked out, there's very little support under us, and we would like to see the NASDAQ, which we know can trend very well, give us a very good move. This would be a 200-point move here on NASDAQ, although it does have a very wide stop at the moment, being a 50-point stop. Now we do see we get the strong rejection. We closed one more time below this range, and then we did get one more re-entry. That retest could possibly be our entry with our stop loss somewhere a little tighter, so we're able to capitalize and get a much better risk to reward on this trade. We'd be able to let it play out. We see we're taking out these lows, retesting them, and pushing lower. The market's continuously making new low of day. I'm sure at this point, if we were looking at the ES and maybe the VIX as well, the ES would probably also be making new low of day, while VIX is making new high of day. These are all different things that I like to incorporate into my system, into my strategy, and you guys should be doing the same thing. Trading requires foundation and a solid system. You can't just trade the orb, you can't just trade supply demand, you can't just trade previous day high, previous day low. Everything comes together. Don't forget, hit that like and subscribe button. I do hope this video helped. Kevin Futures here, signing out with Bullish Bears. Make sure you join our community at bullishbears.com. We live trade Monday through Friday for our community, and we also have some coaches in there as well. So make sure you guys get your ball rolling, take some accountability in your trading, and make that difference. Take care, everybody.